All right, y'all. This news is insane. Donald Trump just announced the most transformative plan for the United States since the Manhattan Project with the Genesis mission. This executive order is going to triple our computing capacity by 2030. Companies are going to get fast-track permits for high-density campuses, immersion cooling, tax credits for anyone building facilities bigger than 25 megawatts, federal GPU procurement, long-term government contracts for AI and scientific research, and hyperscalers are now classified as critical infrastructure. And the markets, well, they likey. They likey a lot. This amount of investment can't be ignored. And it's also going to exacerbate the trends that show why $140,000 is the new poverty line in America. So when Bitcoin crashed last week, some of y'all were running scared like Godzilla was walking down the street. Others of you were actually paying attention to the video I dropped 8 days ago, where I said the smart money knew exactly what was going on with AI and they were already making investments. This is why people say the Bitcoin bottom is in. The billionaires were buying the dip. They knew the White House had something big up their sleeves. So if we call the Bitcoin bottom this time, are you going to believe us? Today, we're going to look at why structurally this is a big deal and what this AI boom is going to mean for Bitcoin and tech investments in general. This is Dante Cook with Bitcoin Simply. Let's go.
With this pen today, President Trump signed an historic mission. This is reminiscent of the Manhattan Project that brought World War II to an early and successful end, similar to the Apollo projects that put a man on the moon in 1969. This is an all-in national effort to take the power of AI and pair it with the 40,000 outstanding scientists and engineers at our national labs to use the world's largest supercomputers to advance innovation and science, to fix our rising energy costs, to give better economic opportunities for our citizens, to make longer and healthier lives possible. Today was not incremental, Brett. It was transformative.
This announcement is transformational, historic, and the big money already knew that it was happening. Remember when I told you last week that Berkshire Hathaway made a $4.3 billion investment into Google? And this is a company that never really invests into pure play tech stocks. Remember we talked about David Tepper's second largest position being Amazon, Stanley Druckenmiller adding 437,070 shares of Amazon last quarter. George Soros bought 1.83 million shares of Amazon in Q3. This is his largest position. And Jeff Bezos getting more and more involved in AI, starting a new AI company called Prometheus. Well, you think they knew something like the White House was going to announce this historic plan for the Genesis mission? I think they knew. The big money always knows. And what do you know? Amazon's getting a $50 billion investment in partnership with AMD, where they're going to build 6 gigawatts of computing capacity for the United States government. They're going to build the first AI and high-performance computing processors for the United States government, using all of the United States government's classified information. This is going to drive more and more inequality in the United States, and we're going to dive into that later in the video. But it's also going to drive major investment into the top portion of the stock market, the Mag 7, which controls about 30 to 50% of all price movement of the S&P 500. And it's also going to drive massive investment into Bitcoin. Bitcoin will be a long-term beneficiary of these megatrends. And the big sovereign wealth funds already know this. This is why the Abu Dhabi Sovereign Wealth Fund added $520 million of Bitcoin in Q3. Are you paying attention?
We know in terms of their holdings and when they added to this position.
Yeah, so you can see that they've more than tripled their position right in the weeks and months up to the sell-off. So, it hit a record high in October, and we can see that they've tripled their position during the third quarter. They disclosed a position at the end of September that was worth around $520 million. And we can see that this is really going to be a part of their portfolio going forward. They're saying that they want to diversify it, and they really see it as the digital equivalent of gold.
The head of Coinbase's institutional strategy also says that structurally, Bitcoin looks pretty good, and it just went on sale if you were willing to pay attention.
Nothing's really changed since the all-time high. If we just step back and think about structurally, in fact, you can argue the news coming out about Citibank, JP Morgan, both leveraging stablecoins at a huge scale. The Czechoslovakian National Bank has come out and announced they will be the first Eurozone country to purchase Bitcoin for the Treasury. Clarifying rules from the IRS. Harvard Endowment announcing they own more Bitcoin than gold. All of those things are structurally very, very positive. From the exchange point of view, we're not seeing a massive increase in open interest in our futures market. CME, you can check it yourself. I was always taught early on, a declining price market accompanied by a rapidly declining open interest means the market is breaking down structurally. People are exiting the market forever. When I look at Bitcoin, I see the number of active Bitcoin wallets roughly the same as it was 3 months ago. I see both CME and Coinbase futures open interest, again, ticking down a little bit, but not nearly in line with price direction. And so I go back to the very, very basic principle of if I like apples, I don't like them less because they're on sale. And so if you like this asset, you like it more. If you don't like this asset, if you've never liked this asset, you now have the microphone for a few months or a few weeks, we'll see how long, and enjoy that moment.
And David Portnoy is the exact opposite of what I would call a Wall Street level of investor. But here's the thing. For as dumb as people think that he is, David Portnoy has made more money than those guys twice over. And it's because he's willing to look foolish when everyone else is sitting on the sidelines. So when Bitcoin hit a greed fear number of 11, David Portnoy was backing up the truck.
Now, am I eligible for this? Because here comes the announcement. Last night, Monday, November 17th, if you want to look at what I did, here it is. I hope I'm not giving away nothing. I probably am, so I probably shouldn't show. 638 bought $500,000 of XRP. 637 bought 400,000 of ETH. 637 bought 750,000 of BTC. 636 bought 500 more or a reverse of XRP. So in total, last night, $1 million of XRP, 400 ETH, 750 of BTC. Blood in the streets. Dave's like a piranha. Dave's like a great white. He's just shark on, fins. Oh, you know what? Let's do it.
This dude bought $750,000 worth of Bitcoin when there was blood in the streets. He said he's like a piranha. I'm like a shark. And this is because there's strong reasons beyond even David Portnoy backing up the truck that we're going to see Bitcoin continue to bottom out here. The institutional demand continues to be strong. Supply continues to shrink. So when the price goes on sale, well, that's really what it is. It's a sale, not people selling, but people having mispriced information in the short term. Anthony Papagliano talked about this on CNBC with Andrew Ross Sorkin earlier yesterday morning.
More normal, and we should expect this reset to then provide a new base, and then we go back to all-time highs over the next couple of weeks or months.
And where do you stand on that question that you just posed yourself?
I heard something pretty interesting. Matt Siegel over at Van Eck said, well, Bitcoin's, in terms of Bitcoin's volatility, it's been cut in half over the last year or two. And so if that's the case, if we're used to 80% drawdowns, maybe now the drawdowns are about 40%, right? You would expect that if the volatility has been cut in half. Well, we just saw a 36, 37% drawdown. And so I do think that as volatility compresses, people will be disappointed to the upside because it's not going to have these blow off tops that they expected. But also there may be some, safety in terms of these 80% drawdowns are gone as well. And so I tend to think that we probably are somewhere around the bottoming. Again, if you see the fear and greed index at, I think it was 8 for Bitcoin, 6 in equities, that tells me that you can't stay there that long. And so I think that we might just go sideways for a while here and then start to kind of grind back up over the next couple of weeks.
The smart money is not selling Bitcoin. They're continuing to accumulate more and more Bitcoin. The wealthiest people in the world don't sell their assets. They borrow against them, they put them in trust, and they never move them. And that's what you now have the ability to do as well with a partner like Ledn. They allow you to unlock liquidity in your Bitcoin without selling your Bitcoin, and they do so without credit checks. They've issued over $9 billion worth of loans and have over 1,000 five-star customer reviews to prove it. Your money is segregated from others in cold storage, and you can see the wallet address or the proof of funds for yourself in the dashboard. Loans start at just 12.4%. You get 0.25% off your first loan by going to learn.ledn.io/simply. And the wealthiest people in the world know how to protect their assets, and they do it in such a way that they can pass it down to future generations. Well, you can learn the same thing, but those people have teams of lawyers and advisors, and you can do the same thing with the Bitcoin way. An advisor from their team will walk you through how to remove your Bitcoin securely, safely, privately and so that you can pass it down to future generations. Schedule a free 30-minute consultation with the team at thebitcoinway.com/simplybitcoin to get started. I've been following Mike Green since 2017 in the Real Vision days, and I disagree with a ton of what he said. But this article that he dropped about the new poverty line in America being $31,200 versus $140,000 was absolutely fire. Based on national averages, childcare costs $32,000, housing $23,000, $14,000 for food, transportation $14,000, healthcare $10,000, other essentials $21,000, meaning the required net income is $118,000 or $136,500 when you adjust for FICA and state taxes. $100,000 is the new poor based on what it costs to survive. And that's why videos like these are coming out. Dude, it's not 1998.
It's 1998, and a good house costs about $125,000. A lot of people can actually afford their own place. A new family car costs less than $20,000, and most families can easily swing a new car. Gas is about $1.03 a gallon. We drive to go on vacation or weekend trips all the time without even worrying about the price of gas. A loaf of bread costs about 85 cents, which is super cheap for every family. Rent for an apartment is about $650 a month. We can find our own place and not have to share with anyone else. A Big Mac meal is about $3.99. Lunch for less than $5. Now that's some seriously cheap fast food. A new CD costs about $14. We love going to the record store to buy albums because it's like a cool collection to show off. Grocery bills are about $40 a week. We go to the store, get what we need for the week, and still have some cash left over for snacks. Dude, are you gonna stay in 1998 or face the reality of 2025?
I mean, this image of this McDonald's menu was taken in 2012. I could have fed my family of 6 for $15. And this is why American workers with degrees now make up 25% of the unemployed workforce. The system is breaking in real time. The Fed recently did a study on U.S. family incomes, and what you can see is that there's a massive gap between the median and the average, meaning that the normal people actually have a much lower net income than the average person, which means it's so skewed to the people with more wealth that the numbers are getting a bigger and bigger discrepancy. And what do you know? The median net worth and the average net worth for people who are older is significantly higher because they have significantly more assets, stocks, homes, real estate, and other things. And it's not looking better for the average person in America. October 2025 had the worst layoff record since 2003. 153,000 job cuts. That's 175% higher than last October. And these companies who are posting record profits and are making all of these massive investments into AI are not making the same massive investments into people. Amazon cut 14,000 jobs. Microsoft, 15,000 jobs. Intel, 15% of its workforce. So are they going to invest into people or compute? The only way out for many people is going to be through the markets, through how much you own and what you invest in. And so you can't get shaken out of these drawdowns. The smart financial advisors will say drawdowns is just the price that you pay for the investments that you have. There was a chart that was posted about the S&P 500 showing these drawdown numbers. It goes down 5% nearly every year, 10% every other year, 20% every 4 years, and 50% every 48 years. And it's actually gone up 16 out of the last 75 years. So when you look at it, do you think the companies that are in the S&P 500, which actually have turned over 85 to 90%, are that more valuable? No, the money being printed into these scarce 500 companies is growing faster than the number of 500 companies. The money is manipulated. And if you can't tell that, well, go back a few minutes to the rising prices that we see. They will demonize Bitcoin for saying it's too volatile. Sure. Look at this chart. I had Perplexity run the numbers for me on Bitcoin with the same type of chart because now we're subsidizing AI anyway. Bitcoin does have a 50% drawdown every 2 years. And every year, you're roughly going to see a 15% to 20% drawdown. But look at the returns. 1,333%, 186%, 5,500%, 35%, 124%, 1,369%, 92%, 303%, 60%, 155%, 121%. But Dante, Bitcoin's down 6% this year. Are you zooming out to understand the long-term thesis of your investment? You can keep pretending that the billionaires aren't buying it, that it's somehow 1998 still, and life will be affordable. that AI isn't displacing workers at an alarming rate, that Donald Trump isn't making a massive investment into AI that's going to displace more and more people, that $140,000 isn't the new poverty line for families, that the rich aren't getting richer. Sure, just go buy bonds and put all of your money in cash. If you don't believe me, well, maybe you can listen to the head of institutional research for Coinbase, who we heard earlier, talking about the difference between risk and volatility. And it's risky to not own Bitcoin.
That volatility is not risk. It is a component of risk, but it is not risk. And it's often used as a synonym. Standard deviation or volatility around a mean is used as a synonym for risk. But the reality is, we would all vastly prefer a highly volatile asset that trends upward over time to a low volatility asset that trends downward. And people always say to me, well, how can you feel comfortable having assets like, whether it's, I've heard this for years, commodities, hedge funds, tech stocks, crypto. How can you feel comfortable having that in your retirement portfolio? And my answer is always the same, which is if you can comfortably, with a risk-free rate, satisfy your retirement requirements, absolutely, it'd be insane to do anything else. But if inflation is beating your retirement goals, if the money in your checking account or your stock portfolio is not going to beat inflation or will not meet your retirement goals, the riskiest thing you can do is not put risk assets into that pool. So it just comes down to nothing is promised, nothing is guaranteed. And if we want to achieve these returns, you have to intelligently model out that risk.
For the 111,000 of you who've already subscribed to this channel, you already know this. And for the rest of you who haven't subscribed to this channel, I hope that somebody sends you this video or you send it to someone who needs to understand what's going on. Bitcoin is an investment that's going to allow you to capitalize on this megatrend and help you to outpace the inflation and the cost of living increases that are coming our way. That's why we advocate to continually buying Bitcoin, not just when it's high or when it's going up, continually buying. And one of the best ways that you can continually do that is by mining Bitcoin. Well, you don't want to mine it yourself and have a bunch of loud machines in your garage. Well, you can work with a company like SAS Mining, who will actually allow you to buy the state-of-the-art mining machine. And with a simple contract where they make money when you make money, you are having Bitcoin and sats sent directly to your wallet while you sleep. You are literally buying every single day. And the Bitcoin is powered by 100% clean, carbon-free, renewable energy sources. Their team is 100% aligned with Bitcoiner preferences and values, which is why we partner with them on this channel. Use the QR code if this is interesting to you and you have the capital to deploy into something like this. You're not going to see immediate returns, but remember, volatility and drawdowns are the price that you pay, and Bitcoin is shown to have superior returns. So over time, seems like a pretty good investment, and you can depreciate the machines. That's another conversation. Use the QR code to get started. This is Dante Cook with Bitcoin Simply, and if you haven't already subscribed to the channel, please do. Get on the game. Happy stacking, and I hope to talk to you on Friday after Thanksgiving.